Be Wealthy and Smart, episode 808.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to explore are digital assets about to go mainstream? Because there's some signs that are showing me the answer might be yes. And I want to share those with you because institutional investors are now investing in cryptocurrencies. Some have been for a while, but it seems like things are just about to get clarified with regulations that might make it even easier for institutions, hedge funds, large investors, and the everyday person to get into this amazing new technology that is about to take over our payment systems and dominate the way that we do transactions. So we're going to explore what is happening with digital assets and cryptocurrencies and what's on the horizon. And might there be new legislation coming even possibly this week to give further clarity for people who want to invest and start using cryptocurrencies. So one thing that really caught my attention was the president's executive order to have the Federal Reserve establish digital wallets for every citizen by January 1st of 2021. Now, you may not have heard about that, but it did happen. And this article I'm going to share with you is from ZephyrNet, and it was republished by Plato. And it says the U.S. government is planning the creation of a digital dollar wallet by 2021. Could this be the end of Bitcoin? And it says, in early March, while everyone was busy talking about coronavirus, the U.S. Senate quietly introduced a bill to create digital currency accounts administered by the Federal Reserve. According to the draft, the bill will require banks to maintain pass-through digital dollar wallets for certain persons and for other purposes. If passed, all Federal Reserve banks shall, not later than January 1st, 2021, make digital wallets available to all residents and citizens of the United States and to businesses domiciled in the United States. The bill, which was introduced by Senator Brown Sherrod of Ohio, describes the term digital dollar as dollar balances consisting of digital letter entries recorded as liabilities in the accounts of any Federal Reserve bank. According to the bill, the term digital dollar wallet means a digital wallet or account maintained by a Federal Reserve bank on behalf of any person for the purpose of holding digital dollar balances. If the proposed Senate bill passes, member banks will be mandated to open and maintain pass-through digital dollar wallets for all persons, including persons eligible to receive payments for the United States pursuant to a federal law relating to the coronavirus disease 2019, who elect to deposit funds into pass-through digital dollar wallets. The concept of the digital dollar wallet is not new. It's been going on for years. The idea started to gain steam after the U.S. Federal Reserve started investigating the use of distributed ledger technologies and how they might be used for digitizing the dollar. In early August, Federal Reserve Board Governor Lael Brainerd said the U.S. Central Bank has been experimenting distributed ledger technologies over the past several years to study what a digital currency might do to the existing payments ecosystem, monetary policy, financial stability, and the banking sector. At the Federal Reserve Bank of San Francisco's Innovation Office Hours on August 13th, Brainerd said, with these important issues in mind, the Federal Reserve is active in conducting research and experimentation related to distributed ledger technologies and the potential use cases for digital currencies. Brainerd added, more broadly, banks, fintech companies, and technology firms are all exploring the use of innovative technologies to enhance payments efficiency, expand financial inclusion, speed up settlement flows, and reduce end-user costs. Digital currencies, including central bank digital currencies, or CBDCs, present opportunities but also risks associated with privacy, illicit activity, and financial stability. The introduction of Bitcoin and the subsequent emergence of stablecoins with potentially global reach, such as Facebook's Libra, have raised fundamental questions about legal and regulatory safeguards, financial stability, and the role of currency in society. This prospect has intensified calls for CBDCs to maintain the sovereign currency as the anchor of the nation's payment system. Moreover, China has moved ahead rapidly on its version of a CBDC. The bill further adds that the proposed digital dollar wallet shall provide functionality and service levels no less favorable than those that the member bank offers for its existing transaction accounts, including with respect to debit cards, automated teller machines, online account access, automatic bill pay, mobile banking, customer service, and such other services as the Board of Governors of the Federal Reserve System determines appropriate in the public interest, provided that digital dollar wallets shall not include overdraft coverage. Unlike charges on traditional bank accounts, digital dollar wallets will not be subject to any account fees, minimum balances, or maximum balances, and shall pay interest at a rate not below the greater of the rate of interest on required reserves and the rate of interest on excess reserves. So what does it all mean for Bitcoin, the world's most popular cryptocurrency, and other digital currencies? Currently, some of the big obstacles to Bitcoin's mainstream adoption are volatility and lack of government backing. The proposed digital dollar will have none of these. So the question is, how would this affect the future of Bitcoin and other cryptocurrencies out there? And are they doomed to fail? End of article. All right, so what this article is really saying is that Facebook talked about bringing out Libra, its own cryptocurrency, and Bitcoin is an anonymous cryptocurrency that also has ties to the CCP, as we have reported. Senator Tom Cotton pointed out in a letter regarding cryptocurrencies. So it seems like neither of these cryptocurrencies are going to be what the survivor is. In fact, they told us in this article what the survivor is. It's central bank digital currencies. It's sovereign central bank digital currencies, a digital dollar, a digital euro, a digital pound, etc. So let's take a look at what the European Central Bank has to say about digital currencies, because more recently than that article was written, this article came out from Christine Lagarde, who is the president of the European Central Bank and former president of the International Monetary Fund. And this article appeared on CoinGape and was published by Brushan Akolkar. And it says, ECB President Christine Lagarde pushes the use of digital euro to complement cash. And the subheadline says, Christine Lagarde, the current president of the European Central Bank, has once again spoken in favor of the digital euro in her recent interview. So here's a short article about Christine Lagarde. It says, Christine Lagarde, the current president of the European Central Bank, ECB, has once again spoken in favor of the digital euro. In her recent interview with a magazine, Lagarde speaks out about the future of money and why digitization is the way ahead. And then it shows that she tweeted, as we enter the digital age, the nature of money is changing. The ECB must ensure that payments in the euro area remain innovative and highly trusted by all Europeans. The article goes on to say the ECB president notes that with the changing times, we have to be ready for getting new innovations in place. She notes that the nature of international trade has changed rapidly over the last decades. Thus, to cater to future demands, there must be new systems in place, and central banks have an increasingly important role to play here. Lagarde notes that fiat money has survived over the last many years based on citizens' trust and the ability of central banks to maintain its purchasing power through monetary policy. Lagarde notes that it is important to understand the shifts in the global marketplace and the growing dominance of digitalization than ever before. Digitalization has given a massive push to the use of digital money, with global businesses transacting trillions of dollars on a daily basis. Non-cash payments are on the rise, with the euro area registering an 8.1% surge over last year. The COVID-19 pandemic has further accelerated the use of digital money. The ECB president notes that the payments and the financial services industry are all set for a massive disruption over the next 5 years. The ECB thus wants to ensure that the euro remains a proper fit for the digital age. The ECB Governing Council is already working on exploring the possibility of issuing digital euro for retail payments. Last month, in October, the ECB also launched a public consultation for digital euro. Lagarde further goes on to explain the importance of the digital euro over the existing fiat cash. She notes that central bank money is unique and crucial in a way that it provides unrestricted and risk-free access to a trusted means of payment. However, it is largely available in cash form to retailers, Lagarde notes. And here's a quote from her. A digital euro would complement cash and ensure that customers continue to have unrestricted access to central bank money in a form that meets their evolving digital payment needs. Issuing a digital euro might become necessary to ensure both continued access to central bank money and monetary sovereignty. Let me repeat that last sentence. Issuing a digital euro might become necessary to ensure both continued access to central bank money and monetary sovereignty. Sounds to me like they're planning for that central bank digital currency. The article goes on to say, she adds that digital euro will be crucial to decline the use of cash. Besides, it can improve euro's liquidity in the global market with improved transactions with foreign currencies. Lagarde's comments come a few days after Germany's finance minister requested an accelerated development of the digital euro. End of article. So isn't that interesting? They're telling us right up front that central bankers want to have a digitized version of their currency. You see, the paper money is causing a lack of liquidity as people don't want to deal with paper during the pandemic. And we're also seeing a lot of money creation because of the stimulus. So the dollar, being a fiat currency that is backed by nothing of value, no longer backed by gold since 1971, and not backed by anything except the full faith and credit of the U.S. government. Well, since so much extra money has been created, it tends to start to devalue the dollar. And in fact, that's what we're seeing. We're seeing the dollar dropping now to 91 cents. And we're seeing it having less than 2% of its original purchasing power from when it came out prior to 1920. And that's what's caused an inflation happening to our goods and services, the price of homes, etc. It's the purchasing power of the dollar declining because it's a fiat currency, has no limit to its supply, and has nothing backing it, versus digital currencies have a limited number that are created forever, and no more can be created. And in fact, every time a transaction's done, a small amount of them are burned up. So there's actually a lessening supply over time, which ensures its future value will be maintained or even maybe increase over time. It's also possible that digital currencies could be tied to some sort of asset that would back it, such as gold, silver, or other valuable assets that would provide value for it. So we'll see about that. That might be in the works as well. So we've talked about the U.S. having digital wallets under discussion, and that was back in the spring. I just discussed the European Central Bank saying how important a central bank digital currency is. How about in the Middle East? What's going on in the Middle East? I just happened to find the Crypto Asset Framework by Abu Dhabi Global Market and their Financial Services Regulatory Authority. And this is from back in May of 2019, where they were discussing digital assets. And they say, we are encouraged by the significant global and regional interest from exchanges, custodians, intermediaries, and other institutions to our crypto asset regulatory framework. Globally, responsible crypto asset players are seeking a regulatory regime upholding high standards and that fosters market confidence. By introducing a comprehensive and best-in-class regulatory framework, the Financial Services Regulatory Authority is taking a leading role in instilling proper governance, oversight, and transparency over crypto asset activities, positioning the Abu Dhabi global market as a destination of choice for crypto asset players. Our engagement with fellow global regulators also validated our position that the key risks have to be addressed for crypto assets to be more widely accepted and institutionalized. Richard Tang, CEO of the Financial Services Regulatory Authority. So even in Abu Dhabi, we have signs that they are ready to adopt crypto as well and have been working on this for some time. Recently, we heard companies like MoneyGram and PayPal are going to start accepting cryptocurrencies in their payment choices. But what about the G20, the big 20 countries that gathered together and gathered recently and talked about accepting digital payments and the regulatory groundwork? Here's a report from the G20 members, and this is from Cointelegraph. It was written by Turner Wright. Digital currency payments may become a reality for G20 members before the next summit in Saudi Arabia. As reported by Kyodo News on July 11th, officials revealed that the G20 summit, comprising representatives from 19 countries and the European Union, will be laying the groundwork to accept digital payments. The changes are expected to begin in October, presumably at the G20 Finance Ministerial and Deputies meeting in Washington, D.C., and before the next summit in Riyadh in November. According to the Japanese news outlet, G20 officials enacted the policy change in response to China's progress on creating a digital yuan and Facebook's anticipated release of Libra. Cointelegraph reported in June that the People's Bank of China's National Council for Social Security announced the completion of the back-end architecture development for the country's central bank digital currency, or CBDC. During the 2019 G20 summit in Osaka, leaders stated that cryptocurrencies did not constitute a threat to monetary stability and that technological innovation could deliver significant benefits to the economy. However, in October, members said stablecoins posed a serious risk to public policy and financial regulations. End of article. So stablecoins are cryptocurrencies that don't increase in value. They're meant to be a stable value. And the idea is that they don't have the volatility that some of the other cryptocurrencies have. So you could go into the stablecoin as if you were going into a fiat currency, and then from there move to central bank digital currencies and then back to a stablecoin. So that's why a stablecoin is more of a threat to a fiat currency than a typical cryptocurrency is. But nonetheless, it shows us that political leaders are taking cryptocurrency seriously, and we may find legislation coming very soon to make cryptocurrencies not only equal to a central bank digital currency, an actual currency, if you will, and a substitute for a fiat currency. But we may also get so much clarity that institutional investors can come into this asset class. Remember, this is a brand new asset class, and it's the newest asset class in 300 years. So are digital assets becoming mainstream, and especially with institutional investors? Well, this is from Boris Grozev's blog. And here's what he said. About 2 years ago, I published an article about what digital assets are and how at some point they have the opportunity to become part of any serious investment manager portfolio. Financial services, and especially the asset management industry, are not the fastest to innovate, adopt new technology, or embrace change. The good news is things are changing faster than usual. Not only Julius Baer, a major Swiss bank, has started offering digital assets to their clients, but a new research report published by Fidelity International has found that already 22% of institutional investors have already added an exposure to digital assets. What has been particularly interesting for myself from the Fidelity Medium post are the findings that 47% of the respondents see digital assets as a technology play. 46% find that the most appealing characteristic of digital assets is that they have low correlation with other assets. And 74% of financial advisors and 80% of family offices view the characteristics of digital assets mostly favorably. For myself personally, this is no news. However, the data starts to confirm the qualitative trend that many finance professionals have already noticed. Crypto or digital assets will become part of institutional portfolios. The asset management industry will have to accommodate these changes coming from both technology advances and investor demand, outpacing the speed with which investment managers can adapt to technology change. Institutional engagement is getting traction. Soon we will see a number of institutionally backed fintech platforms which will allow shifts between crypto and traditional asset allocation to happen in an easier, cost-efficient, and transparent manner. End of article. So we've already seen in some apps that I've been using and have been showing my members of the VIP experience that we're already able to move from any fiat currency, whether it be the euro, the dollar, the pound, the yen, from any fiat currency into many different forms of cryptocurrency, and from there into any digital gold or silver, and from there into many stocks. So already on this particular app, you're able to exchange between all of those things. And you don't have to go back into a fiat currency before you buy a stock. You can actually go directly from a crypto into buying Apple stock. So you see, the technology already exists for all of this to be happening, and this is the trend of the future. It's part of the quantum age I've been talking about. And this new technology is very exciting. This asset class is extremely exciting and about to get regulated in a way that's going to allow institutional investors to invest in a major way. Imagine institutional investors just allocating 1 or 2% to some central bank digital currencies or some cryptocurrencies. Now, you know I'm not a fan of that crypto that starts with a B, and I'm not a fan because it takes too much energy and it can only be a store of value. It can never be widely used in terms of being a useful token and a utility token. It can be a store of value, but even so, with regulations on anti-money laundering and know your customer, I find it difficult to believe that any cryptocurrency that doesn't have full transparency is going to be allowed by regulators. That's just my personal opinion. So I'm not a fan of that B cryptocurrency, but I am a fan of those that are fully abiding by rules and laws and regulations, just like banks are. And they have already complied with everything that they need to be 100% put into law as a central bank digital currency. So that was the reason that I invested in cryptocurrency and changed my mind about this exciting new technology, because I saw something that was complying with laws, that was transparent, and that was something that could function as a central bank digital currency. When you think about getting in on the ground floor of something that's going to have trillions of dollars flowing through it to trade goods and services, well, I don't know about you, but that gets me extremely excited as an investor. If you want to know more about this currency and are interested in joining the VIP experience, fill out the short questionnaire in the show notes and we'll set up a time to talk. And I've also extended my Black Friday savings of 50% off the regular price. So you can check that out on my website at lindapjones.com. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.